Whether you use paper forms, software, or an accountant, filing taxes can feel confusing, disorganized, and the reality is that every year, most of us pay more in taxes than we really need to. This workbook fixes that. It walks you through the deductions available to you, shows you exactly where your savings are, and it gives you a clear strategy you can then use to file yourself, or you can share it with your accountant. Now join me for a detailed tab-by-tab walkthrough. If you already have the workbook, consider this to be your instruction manual. If you don't yet, you can find more information at the link below or on my website at buildwealth.tools. We'll go step by step through each tab. Feel free to follow along and fill out your workbook as we go, or fill it out on your own and come back here whenever you have questions. Now let's start with tab 1. This first tab is just a reminder that this workbook is for planning purposes only. It will not file your taxes for you. I'm also not a tax professional. This is just for your planning purposes so that you can come up with a strategy and so that you can better understand what all the pieces are that can drive your tax savings each year. It will help you identify all of your detailed expenses that you may deduct from your taxable income, but you should make sure that you have proper documentation for all of those expenses in case of an audit. Next, we have our Welcome tab. It also serves as our index. You'll get a very high-level description of how the workbook works up top here. And then you have your index, so you can jump to any tab at any time. Here's a link to the video you're watching now. The most important tip for this workbook is that you will only be filling out these light orange cells with a dark orange border. If you're unable to easily see these cells, reach out and I will give you a higher contrast version with colors that you can see. All dates in this workbook are American style, so it goes month, then day, then year. Next, we have our Setup tab. This is where we'll define our tax profile and some of our deduction categories. Our first question here is, what is our total salary for the year that we're working on? So you would get this from your W-2. Next, you have your net self-employment or freelance income. So if you have a side gig or a business, this is where you would put that. This is net. So you want to estimate your total revenue minus your expenses. You can just estimate this for now. There's a tab later in the workbook that we'll use to refine that number, and then we can come back here and update it once we have something more precise. And then we have a third category for any other taxable income that you have. Next, you have the tax year you're filing for. This current workbook goes up to 2026. I plan to update this in the future, and if you've already purchased the workbook, you'll get those updates for free. Next, we have our filing status. If you're not sure about any of this information, a good reference would be to get your tax return from last year and see how you filed last year. Then you have your age as of the last day of the year you're filing for. Next, we have our HSA coverage type. If you have a health savings account, this is just asking whether it's covering you or your whole family. This matters because the IRS contribution limit is different depending on whether it's self-only or whether it's family. Pick NA if you don't have a high deductible health plan and you don't have an HSA. Next, we have the state we're filing in. Next, we have our state marginal tax rate if your state does have an income tax. If you want, you can leave the state section blank. This workbook is really focused on federal savings, but if you enter in your state level marginal tax rate, then that will be factored into your savings. That being said, everything that is deductible against your federal taxes may not be deductible on your state level, so that's something you need to work out when you're actually filing or working with your accountant. Next, we have our deduction subcategories. You only need to pay attention to this section if you're going to be importing transaction level data. If not, you can skip it. And what you see here by default are standard deduction categories. So we have standard categories for personal deductions, then we have standard categories for business deductions. And if you're curious about any of those specifically, you can scroll down here to get a little definition for each one. If you do want to add a subcategory, you'll first select the category and then write in your subcategory. Just make sure it's something that you will be allowed to deduct. For your business deductions, if you have multiple businesses, you can split up your subcategories accordingly. If there are any subcategories that apply to multiple businesses that you have, then you want to give them slightly different subcategory names so that you can distinguish between them when you're assigning subcategories to your transactions. For this demo, we'll leave that blank. And finally, up here, we can select either partial or exact for how these subcategories will be matched to our transactions. We'll see this in more detail shortly, but in the transaction tab, if you categorize one transaction and there are other transactions with the exact same name, then that subcategory will automatically be applied, which can save you some time. You can do either exact match or partial, which will just match based on the first 8 characters. Either way, you can override the match very easily when you're doing the categorization. Skip to the transaction import or the transaction categorization chapters if you want to learn more about how these subcategories are used. Here we have our Reduce Your AGI tab. AGI stands for Adjusted Gross Income. And these are the first categories of expenses that we can subtract from our taxable income. So right now we have $120,000 of total taxable income. Let's say we find $20,000 here that we can subtract from that. That means that we'll have $20,000 that aren't being taxed, at least on the federal level. First, we have our 401k or 403b contributions. If you have a W-2, then you can find this information on that. If you have a traditional IRA, that is deductible. Any HSA contributions are deductible. If you are self-employed and not eligible for an employer plan, then any premiums you paid for yourself are deductible. Interest you paid on your student loans this year is deductible up to $2,500. If you're a teacher, K through 12th, then you can deduct up to $300 of classroom expenses that you paid out of pocket. If you paid any self-employment tax, half of that is deductible. And then we have a space for any other above-the-line deductions that aren't mentioned here. These are the major ones, but there are other ones. Some alimony can count for this, military moving expenses, and you may have some other ones that aren't listed here. Now we have our grand total. So in this instance, we had just over $12,000 in above the line deductions. That's what this is called. So that brought us down from $120,000 in taxable income down to $107,000. So that was our first big lever in reducing our taxable income and ultimately reducing the amount of money we have to pay this year. Now, when any of us file taxes, we have 2 big options for how we do our deductions. The first is we can take what's called the standard deduction, and based on our filing status, you'll have a default standard deduction. If we scroll down here, we can see that our standard deduction in this case is almost $15,000. So that means if we file standard deduction, that will be taken from our taxable income, so we won't have to pay tax on that roughly $15,000. Most folks do take the standard deduction, but in some instances, it may save you a lot more to itemize instead. Itemizing is the other option. There's a little bit more complexity there because you have to name your deductions specifically and add those together and have documentation. But if that total amount exceeds your standard deduction, then that's what you want to do. And that's the whole purpose of this tab. So we're going to walk through this tab, and at the end, it's going to tell us what our itemized amount would be compared to our standard deduction. Our first category is what's called SALT, state and local taxes. And this is where the biggest deductions in this category typically come from. The first one is state income tax. So that's just to say how much state tax was taken from your paycheck. You can check your pay stub to get this number. If you were making quarterly payments to the state for your taxes, you would enter those here. If you're a homeowner, this next category can be really huge. Property taxes paid. And then we can see here that our total SALT was $11,000, but for 2024, the cap is $10,000. So that means that our SALT total deduction here will only be $10,000, even though we technically have a bit more. Our next big category is mortgage interest. Again, if you're a homeowner, this can really help you out. You can get this information from documents from your lender, specifically from the 1098 that they should have sent you or that you can download from their website. And the first one is total mortgage interest paid for the year. And then we have mortgage insurance premiums for the year. Next, we have charitable contributions. So these can be deducted, and these are donations to qualified nonprofits. Our first one is cash donations, amount not in transaction data. So this is important because this is our first deduction category where we can both enter in amounts and amounts will automatically be taken from our categorized transaction data. So if you're looking at this and all of your cash donations and non-cash donations are going to show up in your transaction data, then you would enter 0 here and then move on. And then when you categorize your transaction data, this third number here will update automatically. But in this instance, let's say I have a couple that I know won't show up in my transaction data. So I'm going to put those in. Next, we have medical expenses. This can be a big one for some folks. So these are out-of-pocket medical, dental, or vision costs that were not reimbursed by insurance. So you have to actually have paid this out of pocket, but you can only deduct the total amount that exceeds 7.5% of your adjusted gross income, which we calculated earlier. But in this workbook, you just need to put in your total, then that math will be done automatically. And this is another one where if those costs are going to show up in your transaction data and you're going to categorize it, then you would leave that first box blank, and then the next box will pull in that total automatically. And you can see in this instance that 8,000 fell just short of 7.5% of our AGI. Next, we have other personal deductions. This will only be pulled in from your transaction data. Again, anything you categorize for this, you want to make sure that it is allowable and that you have whatever documentation you'll need in the event of an audit. And finally, at the bottom here, we have our end results. So we can see here that our itemized deduction based on what we have above is 26,000, which is quite a bit larger than the just under 15,000 with the standard deduction. So in this instance, it's probably worth the effort for us to do an itemized deduction. And if we do that, based on our combined state and federal marginal tax rate, we would likely save around 3,000 compared to taking just the standard deduction. So that's the math you're doing here. You're saying, is that additional savings of itemizing worth the effort? And that concludes our second big lever for our non-business income. So first we reduced our adjusted gross income, and here we looked at itemizing for standard deduction. Here we are looking at our business deductions. If you don't have a business or a side gig or anything in this category, then you can skip this completely. But if you do, you're in the right place. First, we have our gross combined business income. Gross, not net, so this is your total revenue. And our first deduction category is vehicle mileage. So this is total miles driven for business this year. This excludes miles spent commuting. Those aren't deductible, but other business miles are. And the standard rate for 2024 was 67 cents a mile. So let's say we did a lot of driving to see different clients or conferences or something like that and ended up with 5,800 business miles. So in total, that lets us deduct almost 4,000. So this can be significant if you drive a lot. Next, we have home office. So if you have dedicated square footage that you use only for work, then a portion of that can be deducted. In 2024, the rate was $5 per square foot. So let's say we have a small office, about 200 square feet in our home. We would be able to deduct an additional $1,000 for that. Next, we have other business expenses. So if you have anything in the other category, you would enter that here. And again, anything you're manually entering here, you want to make sure that you're not going to also categorize that in the transaction data because you don't want to double count anything. So let's say we did have to pay for some services and get some office supplies. So in total, our manual business expenses, manual just meaning it's not going to be in that transaction data, totals 5,200. Next, we have business expenses from our transaction data. We still have not done our transaction data because we're going tab by tab. But once we've done that, you'll see the amounts populate here, and it will count the number of transactions that are totaling that amount. You'll get a total here at the bottom, and then those totals will be added together here to give you your total expenses. So you'll end up with your gross business income minus those expenses, minus those manual expenses, minus those transaction expenses, and then you have your new net business income. If this doesn't match what you entered on your setup page to begin, you'll be prompted with this yellow box here. And as you can see, we were pretty close, but we were off by a bit. So I'm going to enter in that new amount before returning to this tab. So we can see those deductions saved us about $1,200 in taxes. That should go up quite a bit once we do our transaction categorization, which we will do now. Importing transaction data. This is one of the coolest features of this workbook. It allows you to import transaction data from up to 10 different accounts. So if you have different checking and savings accounts, or you're part of a family and you each have different accounts, you can have a separate tab for each one. And the importing process is meant to be as unfussy as possible. So what we're going to do, we're going to go to our bank's website. Any major bank will let you export transaction data. So you're going to go to that bank website, find where you can export the transaction data. So let's say in this instance, we're going to get our credit card transaction data from Chase. So I'm going to go in there, go to that account, go to transaction data, and then I'm going to select all transactions from this tax year. And I'm going to export that as a spreadsheet. So we'll either say Excel, so XLSX, or it will say CSV, CSV. And once that spreadsheet downloads from the bank, I'm going to open it. I'm going to highlight all of those data, and then I'm going to copy it. So Control C, or right click and select copy. Then I'm going to go into this workbook, and I'm going to right click and do paste special values only, because we want to paste it without formatting. Once we have our data in here, we need to tell the workbook which columns contain the date of the transaction, the description of the transaction, and the amount. And we're going to do that right up here. So first we have date. So we can see that our date is in column B. So we'll select B from the dropdown. We can see our description is in column C. So we'll select C from the dropdown. And we can see our amount is in column D. So we're going to select D. And we're going to name our accounts. And in this instance, we'll pretend this is our business credit card. And for this example, I've already imported some additional accounts. So here we have a Capital One transaction data. And here we have another credit card with fake transaction data. As you can see, if you do paste in the headers, that's okay. It's not really a problem. And even if the date or the amount is formatted strangely here, as long as you label the correct columns, the workbook will automatically reformat those on the back end for you. Now, you don't categorize the data here because we wanted to allow you to do it in one central place. So these 10 account tabs all feed into the transaction categorization tab, which we will look at now. Here we are in our transaction categorization tab. So anything that we import into those account tabs will show up here. It's all centralized into one place. And this is the place where we're going to go through the transactions and identify anything that's deductible and then label those deductions. Now, a few things to note that can make this easier to use. First of all, only edit column F. The other cells do have formulas in them, so you want to be careful, only edit column F. This could be a good time to save a copy of the workbook, just in case something goes wrong. And though you want to avoid editing the other cells, you can filter based on any of these columns. So let's say you want to filter by date or by account or sort by account or sort by amount. Maybe you want to put your largest amount up top. In this case, I want to see all the descriptions together because that's just an easier way for me to categorize. If I see everything in chunks, I can go through it much faster. Doing A to Z will put all of the blanks up top because this is a large table, so you'll have to scroll through all those blanks. So rather, I would recommend doing Z to A, and that will bring up all of your transactions to the top. It will just be sorted in reverse alphabetical order. So we can see how it's grouping things together. So we have our wireless stuff here. So maybe this is a business expense for us. So we might put that under other business. And you can see what happened here is that it automatically categorized our other Verizon transactions in the same way. So we don't have to recategorize those. We already have them here. And we can see that it's the other category and it's a personal deduction. If we want, we can add in a note here. This can be useful if you're going to review it in a future year, or if you're using this as part of your documentation in the event of an audit. You may want to add in some notes here. And then if we scroll further, we see United Way. So this was a donation. So we can call this a cash donation. It's going to automatically do our other United Way transactions. You can see it's charitable and it's personal. And that's the whole process. So you'll just go line by line, you'll identify anything that might be a deduction and you'll mark it. You'll add a note if you want. And as you do this, the amounts will update automatically on other tabs, specifically your itemized or standardized tab and your business deduction tab and on your dashboard. And speaking of our dashboard, let's go there now. Here is our tax savings summary tab. And it's meant to lay out all of those deductions, all of these things that we were just doing to reduce our taxable income into a single place. Not only does this add it all together so you can see your total savings, but it helps you conceptualize what the different pieces are that can reduce your taxes, what those levers are. so that over time, year to year, you can maybe lean into some of these more so that you can increase your savings over time. So first we have our AGI reduction. That's things like our 401k and IRA contributions are deducted there. You can go back to that tab to see what's included. Layer 2 is our personal deduction method. So this is where we're either itemizing or we're doing standard deduction. In our case, itemizing was more. So this is going to assume that we're going to itemize and it's going to show us the saving for that. So itemizing over standard deduction would save us an estimated $3,000 in taxes. Again, that's our total marginal rate, both our state marginal rate and our federal marginal rate put together. Then we have our business deductions. So this is a combination of what we entered manually and what we categorized in our transaction data. So all of that together comes to $6,500. And in total, this would save us almost $9,000 with, again, that combined marginal tax rate. Now, if we go lower, we can see all of this in much more detail. So we have our savings breakdown. So we can see reducing our AGI made up almost half, followed by itemizing, and then our business deductions had the smallest contribution to our savings. We can see what made up our AGI here is this little card. We can see our 401k, HSA, educator expenses, and then we have itemized for standard deduction. So this will list what was itemized. So we have our SALT. Mortgage interest was by far our largest, a little bit of charitable donations, a very small amount of medical. So once we categorized some of our transactions, that tipped us over that 7.5% AGI threshold, and then other. So in total, we have almost $28,000 to itemize, which is larger than our standard deduction. So it's going to recommend itemize here. And then our third layer is our business deductions. So we can see that total amount here and then our net business income. And if we go down, then we get this table that shows us where we have room for improvement when it comes to savings. So in this case, we contributed $6,000 to our 401k, 403b. We set up our profile as being 60 years old, which means that we can do large contributions to catch up. So next year, if we find ourselves with a bunch of extra cash, this might be a good place for us to put it because we could save an additional almost $12,000. Then we have a summary of our itemized versus our standard deduction. So as a reminder, our standard deduction for how we were filing was just under $15,000. And then our itemized was much larger. Next, we have the categories making up our business deductions in one place. So first we have our manual entries. So manual means that we entered it in on our business deduction tab. And then we have our transaction total. So this means that we identified transactions as deductions. Then we have our total here and total estimated savings. Then we have a visual breakdown so we can see where we were getting the most savings from. So our vehicle was the largest, followed by supplies and services. This can be a good check where if we see a really low number here that we expected to be higher, or vice versa, that can trigger us to go back in and see what's going on with the transaction data. Here we have a condensed summary of how tax savings works. So we have our gross income, then we have our reduction of our AGI, then further deductions, then we have our final taxable income. Next, we have our deduction totals by category, so we can see the amount and then the count of transactions that makes up that amount. Then we can see our estimated tax savings per category. And then on the right, we have our top 10 largest deductions. And that concludes our dashboard summary, but we have one other tab. And this is our accountant summary tab. It's meant to be something that you can print out easily and reference either as you do your own taxes or you can give to your accountant. It's not what you would actually file, but it can be a useful reference so you can see what you're expecting here. And once you have your taxes ready to go, you'll have a sense of whether it is similar to what you were anticipating or not. And this is all of our income and deductions in one place. So we have our income and then all of our deductions, both for business and personal, and then our ending taxable income. And that is our final tab. And that concludes the walkthrough of our workbook. Now you should have a clear picture of your tax saving strategy. And that should be a strategy that you can use and build on year after year to save more and more as time goes on. I hope this workbook has made taxes less mysterious for you, maybe even a little bit fun, probably not. You can find more workbooks like this at buildwealth.tools. If you have any suggestions for features that would make this more useful for you as you do your taxes, reach out anytime. I love to implement those in future versions. I hope you have a great rest of your day. I'm Kev. I'll see you next time.